do want to begin, though, with you, Josh, because you have some interesting new moves that you have made in this market. And the first one is that you bought Corning, okay, GLW, which is trading right around a 52-week high. It's like pennies away from that, on pace for its 7th straight day of gains. So amidst this momentum, why are you buying it now?
So it might be a little bit short-term overbought, but this is the type of technical situation that viewers of the show know that I'm personally looking for. I'm looking for really good companies that are at some sort of an inflection point where the buyers are overwhelming the sellers, and that's exactly what's happening here. This is one of the oldest companies in America, 170 years of innovation. They're in all sorts of verticals: life sciences, mobile phone and computer displays, environmental, specialty materials. But the real driver here, Judge, is optical fiber. So if people were around during the first .com build out, one of the things they would remember is that Corning was one of the hottest stocks in the world. That whole thing is happening again, but now with AI. And you really can't do the types of stuff that the hyperscalers want to do without huge orders for optical fiber. And I think the inflection in what we're seeing with this chart is exactly that. There's been excess inventory at the phone carriers of optical fiber. That's being worked off. And now management just said on April 30th, you see this big gap up after the earnings report, that Q1 would represent the low point of the year. That inventory in the system that's kept the stock at a discount has now been worked off. And they're starting to see the beginning of AI-related orders. And I think that this is the type of stock that could get rediscovered. So it just hit our best stocks in the market list. RSI is about 79. So short term, it is overbought. But I think it'll hold that post-earnings gap, which is about $31 a share. So as long as that rising 50-day stays above the 200-day, I want to be long here. You got a 3% dividend yield, which I think will act as a cushion. You got 13 years of consecutive dividend increases. You've got a company with the longest debt maturities in the whole S&P 500 with an average of 23 years. And you've got this huge wave of spending, not just from the hyperscalers and AI, but the Broadband Equity Access Deployment program, which is a government program called BEAD, could be incremental, another $42 billion to expand access to high-speed broadband all over the country. Corning is going to be a player there, too.
Okay, so we see that stock on the move. The other stock you bought is SN, another one trading right around a 52-week high. That's SharkNinja. Tell us what caught your eye about this one.
This one's more of a flyer. I definitely wouldn't touch it right at this price. I'm in it lower than here. This is a company that's based in Needham, Massachusetts, but very few people are aware of it because it got bought by a Chinese billionaire who then spun it back out in 2023, making it a U.S. stock once again. And when they did their IPO in August, Chinese stocks were at their lows. People just didn't want anything that had to do with China. But this company is one of the hottest brands in American appliances. The Ninja blender and the Shark vacuum cleaner. If you've bought a blender or a vacuum at any point over the last couple of years, there's a very good chance you bought a Ninja or a Shark. They have been expanding into other categories like outdoor, like skincare, believe it or not, hair care. The company's just on fire. And this is a company doing $3.7 billion in revenue. RSI is about 80. That's scorching hot. I would probably let it cool off a little bit before establishing a new position. It's an 18 forward PE. Earnings per share growth this year expected something like 20%. So that's the story with SharkNinja.